So I want to show you the new 10 EMA strategy, and this is based off the real life trading, we'll call it in-house strategy, the 10 EMA, where you are looking bearish and bullish for some day trades. And so I want to show you how this works. We're using in this case a index, which is the DAX 30, the German 30 on a 30-minute chart. And I want to walk you through how this works, try to explain, do my best to explain how the strategy works so you have a good idea of how it functions. So going ahead and kick off this back test and show you how this works. And we'll give it just a minute to play out here. So what we're doing is we're looking for we're looking for some candles to give us there you go. We got a signal candle there. You see that red asterisk, and we're looking for a move lower. In this case, it triggers us in and moves against us. So quick 1 hour, which is 1% or $2,000 in this example, quick 1 hour loss, no big deal. This does take multiple trades per day, so it does keep up with how many trades there are. That's a setting you can control. I think this is currently set to, I believe it's set to 2 a day in this exact example. But what I want to kind of direct your attention to is here we have a bullish candle closing below this red line, which is our 10 EMA. And so in this case, what we're doing is we're looking for a close below, and we want the high of the candle to breach, and go above. So we want the high of this candle to go above the 10 EMA with a stop here, kind of entry here. And we want a little bit of we want to roll over and go lower. In this case, it did go lower, but not low enough to hit our profit target. So our stop kind of kicked us out of the trade. And its first example didn't work, but let's show you the rest of the trades, how it works out for the rest of the day and the very next day. So we're going to let this play out. Let me see if I can speed this up just a smidge. There we go. Again, we're waiting for bullish and bearish. This crazy candle came in because of interest rate, some kind of Fed news. Here we go, looking for a break to go lower, see what happens. If not, we're going to cancel that order. Next candle, boom, cancel. So you saw one of the settings is waiting for a close below, right? So waiting for a rollover. We did get a signal to get into the trade. However, one of the settings also is set to 5, which means 1, 2, 3, 4, 5. If it doesn't trigger in 5 candles, go ahead and cancel the trade. So cancel the trade if it doesn't trigger right away. So boom, we're going to keep going. No big deal. The order just didn't fill. We're waiting for a lower move and it went higher, so the order didn't get filled. So we're going to keep rolling. Let's speed up just a little more. And each of these candles represents 30 minutes. Oops, it's going really fast now. Each of these candles represents a 30-minute moment in time, right? So we're waiting for a bullish trigger to get in, go higher. There we go, exited. So we just grabbed a nice bullish win. So add to that it's currently set to a 1.2 R target. So it's always going to calculate 1.2 times your risk, meaning 20% higher of what your risk. And so here we are at the end of this example. We had 2 losses, 2 wins, no big deal. But even there, we still were able to capture, 2 losses and 3 wins. We're able to capture some alphas, capture some gains just using a $2,000 risk at this point. And so that is the basics of how it works. Again, it's bullish and bearish. In this case, we're waiting for a green dot signifies a bearish candle closing above this red line, this 10 EMA, and the low, of course, crossing below, and then we're waiting for a break higher. So basically meaning we're waiting for the next candle to breach and go above. If it does, then we're in the trade. If it doesn't, then we don't get into the trade. Trade is not automatically triggered, and then we count that 5 candles. So in this case, if the next candle went lower, it would count 5 candles. If it didn't ever come back up to this level, then we would never be in the trade and the trade would automatically be canceled. In this case, it did trigger and went higher, and we had a 1.2R trigger. So 1.2R profit taker, boom, exited the trade. Same thing right here. This was our trigger candle, and it did go lower, but the next candle triggered us in, and we waited for that 1.2R, grabbed yet another win. And then here on this other trade here, we got a bullish trade here, got in, triggered, and got out at a 1.2R with the stop down here automatically. So yeah, all that is, these are all settings that you are able to configure, and I'll walk you through kind of what that looks like real quick. If you were to go here and look at, these are the settings that you can config, which is basically the profit taker. You can change that to 1.2R, you can change it to 1.4. It basically is what do you call success? Now, if you were to just get crazy and say, call everything I need 10R or it doesn't win, you're going to have a very high losing rate. So what that means is, if you set it to 10, is if you get to 9.9999 and it doesn't ever hit 10, then it goes back and loses, and that's considered a losing trade, because what you're doing is you're defining what success is. And so the maximum number of trades per day is 2. The SL, or stop loss padding, basically means how much of a wiggle room, how much padding do you want the bot to use to kind of calculate some of these trades, where you're putting the stop loss below the low of a bullish trade or above the high of a bearish trade. Again, a certain number of candles, 5 candles, or it'll cancel. Risk amount, obviously if you're using a bigger account, smaller account, you would go lower. Max risk slot in the, the risk amount in the max lot size. And that is how this strategy works.